Okay, in today's episode, we're actually speaking to my personal bullion dealer for all the physical silver and gold, pretty much all of it that I've ever bought. And his name is Mark Gonzales. He's turned out to be a personal friend and awesome guy. And today, what we're going to be doing is getting the inside scoop of what is truly happening right now in the gold market, in the silver market, the real inside scoop they really don't hear very often. And so Mark is from First National Bullion. If you want to reach out to Mark, right there down below for your bullion needs, I'll put the link to website right there down below. Last but not least, just want to give a shout out to our channel sponsor, which is Vizsla Silver, one of my favorite silver and gold stocks. Now, if you're looking to add to your portfolio, consider checking out our channel sponsor, Vizsla Silver. Make sure you hit the like button right over there on this side, right over there on this side. Send this out to more people. Give us your price predictions for gold and silver for 2021 right there down below. I'll be asking Mark that later. How you doing, Mark?
I'm good, Jake. How you doing today, man? Good to be here.
Doing good, doing good. All right. So you got to tell me right now, it's precious metals Armageddon to some people because the price is going down where seemingly every factor should have it going up. A lot of places are having shortages, especially retailers. And so it's this very weird paradox where the supply and demand fundamentals seem to be incredibly bullish, but the price seems to be following a different trajectory. So give us an inside look of what's happening right now as a bullion dealer and someone who's always on the phone with warehouses and what's going on.
Well, pretty simple, exactly like you said. Price is stagnant to going lower, but yet it's hard to get a hold of. I know personally that orders we place for clients, because really nothing's in the store, hardly anything's in the store. Someone has to come in and sell us product. We are able to create two-way markets because there are 4 stores in 2 states. So we do have that unique advantage, but at the same time, no one's coming in to sell. The only one coming in to sell is someone that is maybe trying to chase other markets, emotionally driven, or simply they're going broke. So it's hard to get any product, and any orders that I do place. I mean, honestly, Jake, I'm getting quoted anywhere from like 3 weeks to undetermined. And the premiums on these things to acquire, to sell, can be anywhere from $4 to $8 over, depending on the product. And on top of that, I can't even guarantee when you're going to get it.
So you are saying that while the price is going down, people are not selling to you. The price is going down, which one would assume that means people are selling to you. People are not selling to you. They are not selling their bullion.
Not really. Very, very, very little. You have individuals of large wealth that are coming in or structuring deals with us to sell 10-ounce kilo gold, large positions, because maybe they have an apartment complex they need to keep afloat or something like that. So why the price is going down is it's very interesting. I mean, you do have short positions on gold and silver. But at the same time, if you look, what I find interesting is if you look from Monday of last week to the close on the commitment of traders, you had the open interest of gold dropped by over 11,000 contracts. Silver was monstrous. It was like 16,000 contracts. And I checked this morning, and from last night till today, you've got another 7,000 contracts in open interest in gold that was removed. And you have another 11,000 in silver. So the percentage of open interest on silver against standing or extraction went from 140%. It's now at 86%. And that happened in a week and a day. So bets are against this product are being removed. That's something I found back in March of 2020 when everything just pretty much got eviscerated. Silver opened up, if you remember those days, it opened up at $11.05. Dow was down, open 4,000 points. Within 2 days, the open interest of silver on global mining went from over 160% down to the low 80s. So a strong position that has been kind of moving this market or controlling this market is now gone. At some point, this market is going to absolutely take off. My fear is with the production shortage, mines being reduced in capacity due to COVID, when everybody realizes that they need an insurance policy, it's not going to be there. it's not going to be there. You're priced out of the market. The premiums are going to be too high. You'll have to bribe so much just to get it out of tight hands. And that's a big fear of mine is I think we're in a reset globally. The dollar is being removed as the dominant yield. This may take a little bit of time, but the framework's there. If things were to go to hell tomorrow, it could happen. So that's what I see. It's a tight market. I don't see a ton of suppression on it. And what little suppression you get, it's not having a huge effect. Right. So everybody needs to be patient, load up, and you're going to be rewarded.
Okay, so I wanted to discuss that unobtainable, something that you've told me since the first time we had a phone conversation, but really quick, open interest for someone that may be unaware like myself, these types of terms. So open interest means that people are betting that it goes down. So when you say they're removing open interest, you're saying there are big money that is removing their positions of betting silver goes down. Basically, you're seeing that start to unwind itself. That's what you mean by that?
Correct. Open interest is a short or a position against or outstanding interest against a market size. Okay. So it's very common. You can hedge in commodities, anything, right? You have fast food chains that have a team of commodity brokers that just hedge soy, right? Because they can't raise the price of tacos, whatever the case may be. So the mining and extraction of silver coming into March 2020, the outstanding bets or opens against interest against that totaled 160% of what was coming out of the ground. And that was removed down to the low 80%. And
got it.
Yeah. So hedging is very, very common. Let's say that you're a rancher and you have 1,000 head of cattle, but the auction isn't for 2 months away. Now, if the price of cattle or beef goes down, I mean, you're underwater, you're sunk. So you create a subsequent sale that will appreciate in value against a declining price to keep you neutral, so to speak. And when you have something like 160% against mining extraction, I mean, that is just absurd. An average or feasible amount would be anywhere from 85 to maybe 110 high end. So I equated, and what I try to tell people so they get a better understanding is where I think the manipulation is gone for the most part is when you're at 160%, it's like driving a sports car in third gear, at 3,500, 4,000 RPMs. You if that engine is tight, man, you hit the gas, it's going to move. Which is
basically what's happening right now, right? And this is that squeeze on supply demand, because when you do that, it kind of can create a distortion, right? So right now you're saying people aren't finding it, they aren't seeing it. And you told me that I've even joked with you. I said, I felt like it was just your sales pitch, because I hadn't been buying much bullion, and I came to you and I said, hey, look, I want to make some large purchases. And I said, I want to buy gold. And you said, no, basically you said, I'm not letting you. You said you can only buy silver. Here's why. And we'll get into that in more detail. But you said, look, this is going to be unobtainable. And I was always like, yeah, like, all right, you're just a salesman. But now you're seeing that. And where do you think the price can go if this keeps happening? I mean, we're seeing the price going down, so it's not making much sense.
Honestly, where I think the price can go, you'd think I was just out of my mind. So I won't put a number on that. But to say that the nominal high of $50 won't be breached many, many times over, I think is very naive. And by unattainable, it's a term called backwardation in commodities. So what that means, it means shortage, and it happens all the time. So let's use silver as an example. Silver contracts are traded in 5,000 ounce lots. So let's say you as a person, you, Jake Ducey, you have 5,000 ounces of silver. You see silver trading at 26, 27, you can get a contract right around that price, take delivery of it. Why wouldn't you call someone like me, negotiate 31, 32, 33 for your silver, go back in and buy a contract and take delivery, and keep the delta, keep the difference, right? You make good money. Well, you simply don't do that because you don't trust that you'll ever be able to reproduce that position. which means that on top of typical manufacturing spread and dealer cost, you're having to pay, in my opinion, a bribe to get it out of someone's hands, because what's coming out of the ground already has firm contracts on it, and what's above ground is in tight hands. So you got to bribe that thing out. So what this thing, I think this looks like, if you're already paying anywhere from 33 to 35 and above, depending on the product, when the price is here 26, 27, when we're at 50, you're going to pay me 80. When we're at 100, you'll pay me 2. If silver gets to 1,000, you won't get it. Going back
basically, you're saying there's never going to be like a legitimate price discovery. It's just going to get more and more and more out of whack. Because you've always told me that too. You're like, eventually you're going to 100, but you won't be able to buy it for less than 150. You're just saying you think that this trend is just going to continue and continue.
For the most part. Now, your spot price or your market price is going to rise to follow, but still at the same point with what's going on, and it becomes more evident that the world currencies are being reset, you're going to have this go into even tighter hands, right? And then you have this new green initiative where we got to change all these cars, EV, all that stuff. That takes silver. It really does. And where's the preferential treatment going to go on contracts coming out of the ground? It's going to go to the industry. There just simply isn't going to be enough. I know dealers in mints, and I've talked to them personally, they are scrambling to buy as many 1,000-ounce silver bars and 100-ounce gold bars, and even try to get 400-ounce gold bars just to refine down and make the smaller junk for you to buy. At some point, the music stops. Does that make sense?
Yeah, it makes sense to me. You've always told me this, and now I'm seeing it play out, whereas before I didn't know what part of you I agreed with and what part seemed more far out. But now we're seeing it happen in real time, yet the price is going down. So, the sentiment in the metals does not reflect the things that you're saying, especially when I have a YouTube channel with a bunch of comments that I'm seeing. And so why is the price going down if you're saying these are the things that are occurring?
The price going down, in my opinion, let's go back to Reddit. They tried to squeeze SLV. The shot silver went from about 26 up to $30, and then they raised margin requirements. So every little effort is being put on to manipulate this price a little bit down, but there is a floor on it, in my opinion. And I think we're seeing roughly that floor, mid 17 on gold and roughly the 25, 26 on silver. I don't expect a massive whirlwind below that. So this is it. I think we're here. There's a lot of ammunition that has been spent on trying to manipulate this price that just simply can't be covered anymore. Bottom line. And at some time, the piper has to be paid. So you still had some shorts last week that were piled on, but they all got removed. So the short answer is, I'm not looking at the spot price. I'm looking at the price to obtain this stuff, because that is the true market price. When you have an abundance of currency being printed like mad, you will get price distortions by all means. You can see it in the equity markets. You can see it in the real estate markets. This will matter at some point in silver, and I think it's going to come very, very quickly. And the problem is once this price goes and breaches 30, you're going to see 50 within a matter of weeks to months. And by that time, it's almost too late. When people realize that they just have run out of time and they need to know someone like me or find a dealer or get their hands on metal, they missed it already by months. So I try not to look so much at that spot price. I don't trade the futures. I don't trade the SLVs. I don't trade the ETFs. I hold physical bullion. I deal with physical bullion, and you're seeing the true price is 33 to 35.
So I want to talk about, because you're a pretty interesting guy, you discussed this world currency reset, and these are things you've been talking to me about for a couple of years. And so I'm curious to know what you think of what's happening. But before we get into that, let's wrap up on the subject of metals with, why did you always tell me to buy silver instead of gold?
Really easy. It's fundamentals of supply and demand. You can look back through recorded history. Let's take 2008 to 2011, for example. Silver went over 5 times higher. Gold went about barely 2.5. And the reason being is you got a silver market size above ground, including everything that we have, silverware, jewelry, all that stuff. The market size is estimated roughly at current price, which will be discovered higher. It's about $50 to $70 billion in size. All right. And the price of silver is, for the most part, affordable or attainable, at least at 1 ounce for, I would say, the majority of the world. And you have a gold market size, which is, I mean, this thing is roughly between a $9 to $11 trillion market, and the price point for it is out of reach for the majority of people. The benefit with gold is you can put just a stack of wealth, right, in a shoebox. Silver's a lot more, as you know. So when people wake up and they find out that their 401k is down 10% on a Monday, 50 on a Friday, and this will happen, I become very popular. They rush in, they buy silver. It depletes the supply. Silver moves at a greater ratio to gold percentage-wise, thus make gold more affordable in silver terms. In '08, the exchange of gold to silver, if you took gold's price and you divided silver into it, you're going to find that exchange. Think of it like a currency. Silver's currency is going to appreciate above that of gold. In 2011, it only took 31.6 ounces of silver at the spot price to buy gold from 88. So silver obviously appreciated more. Further note, where the opportunity lies for the coming market downturn in real estate and equities is in '08, the same time the exchange of silver to gold was 88 to 1. It took 20 ounces of gold to buy 1 share of the Dow. At the time, it only took 31.6 ounces of silver to get gold. It also only took 31.6 ounces of silver to get 1 ounce of gold. Got ahead of myself. It only took 6 ounces of gold to buy the Dow, if that makes sense. I kind of threw it off a little bit there. I'm expecting this ratio to go to possibly 10. I think you could have 10 to 20 ounces of silver will equal 1 ounce of gold. I think a half ounce of gold will equal 1 share of the Dow.
So then, do you think that it's a similar market and future as to, say, 2011, where the price, goes to 50 or 60 or wherever it goes, 70, 80, and then it crashes 40%, and then it does nothing again for 15 years, and it's like $30 again? What's your end game for gold and silver?
I don't think that happens at all. I really don't. And this goes back to backwardation, shortage, inability to get. In 2018 and 2019, governments and central banks bought so much physical metal. The only time they bought more metal than they did in 18 and 19 was in 71, knowing we were removing the peg internationally exchanged of dollar to gold. So what do they know that we don't know? I do also know that on April 1st, 2019, Basel III Accord was implemented, which took gold from a tier 3 asset to a tier 1, making it money again, something that hasn't been the case since the mid 70s. Again, they front run the market for their own better good. I think the prices of precious metals rise to a level that is literally out of reach for most people. And that's just it. You either have it or you don't. We are in a global reset. Everything is going to change.
So what do you keep saying this word reset? And you've talked about this for the few years that I've known you, because when you and I, I do a sales call, but you and I would just end up talking philosophy for an hour about the future. And, So let me ask you, what does this mean to you? Currency reset. What is it? What does it look like? Where do you think it's going?
Well, there's a lot of moving parts, and it's a ton to get into. So we'll just kind of pick a part of it. Well, how this works is you have a dominant reserve of exchange in the world, and that's the US dollar. So everything in the world is priced against the exchange rate of currencies to the dollar. And when you have that, it's a privilege where all of your inflation and manufacturing of this country is pushed to the countries that sell their currency or price their goods at a loss to buy goods priced a dollar. They're absorbing our inflation. Jobs go over there because it's less expensive to manufacture something. And then the country of dominance runs deficits. They import more than they export. That is a very polite way of saying you spend more than you make. So mathematically, at some point in the future, you just simply can't do that, especially with a credit created currency with interest remaining. So April 1st, 2019 Q1 Treasury report. And anybody can find this. It's about 102 pages. It clearly states in there that our own Treasury Department said by 2024, the US can no longer afford its interest. All right, so our time is up. And when this happens on a reserve unit, which is roughly anywhere from 40 to 100 years in scope, you get this devaluation and you move on to what's next. And the country that was dominant with exchange gets revalued lower and now has a negative exchange to something else. Last example was the British pound, which started its decline in 1908. And then through Bretton Woods, the dollar became dominant in 44. So that is what I think all this chaos is about. I think it's a smoke and mirror show, quite frankly, to distract people and try to extract all the blood from the current financial stone to move to the next one. And it will be digital with negative yield, and the dollar is going to be revalued. I think you remember I told you about the IMF SDR, and I think I was the first one to tell you about that. The IMF SDR is what is going to be the pricing mechanism of what comes. It was created in 1969, knowing we were going to come off the gold standard, right, in 71, and knowing there had to be some sort of basket or trade desk to absorb the US potential hyperinflation. So this system's been put up for a long time, and anybody can go to the IMF website. They can look up the SDR, see how it's structured is, see the exchange rate to dollar, which currently it takes $1.44 US to get one SDR. So we already look like other countries to us. So long and short of it, the SDR was created as a trade desk to absorb inflation, because let's say we come off the gold standard in 71, and then 72, 73, you have 5 European countries, let's say, doesn't matter who, and they want to sell 5 to 6, 10% of their treasuries back to the US. If they were to do that back to our shores, if 100% is full value of something, you don't have enough market demand to meet the demand, so the value has to come down. It's something called the bid to cover. And the first sale could be 20, 30, 40% down, right? More sellers than buyers. So there is a trade desk which still exists today at the IMF where countries can sell treasuries to the IMF, and they would synthetically counter that sale of treasury with one synthetic creation of an SDR. It is not a currency that anybody's going to use. It is a benchmark or a unit of price for exchange, only for governments and central banks. That, of course, hedonically absorbs our inflation. That trade desk still goes on today. So a lot of people get misled thinking that all these countries that have our debt will not just hit the exit because it would drop the value of what they're selling, thus hurt them. Not true. So that trade desk does two things. One, it absorbed the inflation of the US, so we didn't feel it. And two, as countries realize deficits are spending more than you make and they start exiting, you're building up the base of the next world pricing, right? Scary thing is IMF is not a country. There is no way to justify or comprehend what a debt to GDP ratio is. This is, in my opinion, that absolute end game. You had the Bank for International Settlements talk about removing currency and going to CBDC coins, something a lot of people are going to start hearing more and more about. It's already being promoted, but CBDC coin is central bank digital coin. And you're going to start hearing about this on the mainstream media. You're also going to start to hear about explore or test or experiment with the lower bound. Lower bound is negative, right? So Augustine Cranston, most people don't know who he is, but he runs the Bank for International Settlements in Basel, Switzerland, which is the bank, right? They tell everybody what to do. The Fed does not make deals with Russia, China, Italy. It doesn't make deals with anybody without the approval of this organization. And in July of 2019, there was a lecture at the Bank of Ireland where he mentioned by 2025, we need to remove currency. It's our attempt to remove currency globally and go to CBDC coin to credit or debit its value. Credit is your interest earned, debit is the interest taken. And interestingly enough, this comes after a piece that people can find on the IMF website from early February, I think February 4th of 2019. It's an article written by the IMF called Cashing In, How to Make Negative Interest Rates Work. And if you know how to read their speak, in there it clearly gives forward guidance on the dollar of a +2 interest rate to a -4. So essentially going CBDC coin, you can't get a dollar out when you owe 4 cents. Does that make sense?
So you're saying +2 -4 from the US dollar to the IMF's currency?
No, that's just the interest rate on the dollar.
Got it.
Right? So we're going negative. And I think the dollar gets repriced, much like you've seen other countries do, because currency is created through credit. So when you want to discharge a bankruptcy, you simply adjust the credit end by removing zeros or moving decimals, and you have the opposite effect on the value of what it created. Example, Mexico in the 90s. They went to bed and the peso was a peso. They woke up and it took 10 pesos to buy that peso, right? So they devalued 10 times, but the opposite side when it comes to debt payment is it only took 1 peso to settle 10 pesos of debt. I think that's going to happen to the US. And then I think we go digital with a negative yield. And I think we get marked against the IMF SDR as the benchmark, which we already have a $1.44 US to it. So we're losing. And I think, the system was set up so long ago for this moment in time, but most people, they just don't comprehend it. They feel the US can just print their way out of anything. And that's ironic, because that's the whole reason we're here is we have the luxury to just inflate and fund our deficits through more debt. It's a Ponzi scheme.
So when you say the US devalued their currency, or there will be a coordinated devaluation of the dollar, you're saying that because a lot of people say, well, there's no other, what are you going to replace it with? The Chinese yuan? And people say you're never going to be able to replace it. So you're saying it won't be replaced, it will be revalued, but then countries will use this SDR as the way they balance their own trades, but normal people like you and I will still be using these crappy government currencies that are getting worse and worse, but now governments will settle in something else. Is that kind of what you're saying?
Pretty much. Just like pound dominated the world in the 1800s up until the early 1900s, we had our run. It's time for us to take a back seat, and the SDR is going to replace the role of the dollar of pricing worldwide. So dollar still stands. You still have the dollar.
Do you think they'll call it an SDR?
I don't think so. I think you're still going to call it the dollar, but everything's going to be priced on its exchange. Your cost of living is going to go with the exchange of dollar to SDR, right? So if you're at $1.44 to 1 SDR or special drawing rights, and it happened tomorrow, your cost of goods and services going up by 44% at least, because you have to absorb, just like other countries, their goods and services are priced on their loss or exchange to the dollar.
And is this a slow process of inflation, or what does this look like?
Well, inflation's here. It's been a slow process. The SDR was created in 1969. So this has been also a slow process. And there's been a lot of papering over to create the illusion of liquidity and solvency. But that's like giving the drug addict more morphine to try to cure their problem. It's just not going to work. It's going to end up very, very destructively. So we're already going through that slow process. Now is where it accelerates, right? Because here's the thing: when you shut the world down, such as they have, and I'm not going to get into my beliefs of what actually is going on out there in regards to that, but you come out of this, one, you shut it down, you have that patsy, you have something to blame the bond mess on, right? All the loans for small businesses, they're going belly up. All right, think mortgages in 08. Just looks a little bit different. So now you have that patsy. You have something you can blame. Second, you come out of this with half the world is unemployed, right? It's just... you then have to go to a universal basic income to put food on the table. But the fear is I don't think you're going to be able to, as you're seeing, if anybody's read the papers of what's being mandated out there to reenter society, you're not going to be able to get that handout unless you're compliant. And now we're going to go digital with negative yield. Does it happen tomorrow? No. Could it happen in a year? Absolutely. Could it happen in 2? Yeah, but it's here. And I believe it will happen because, one, you have the Bank for International Settlements, the IMF, all the top banks are that run the show. I mean, this is what they're talking about. They don't talk about something that they don't do. So you know it's coming. You just don't know the exact time frame. But when it does happen, it'll probably happen just immediately. You're talking a day to a week, and boom, that's it. Just new normal.
And will this be a global phenomenon? Because, like you said, you're just kind of throwing out a number, but you were saying, a bunch of people globally are unemployed. And we often think just of America or Canada or whatever of these types of countries. But, you consider how much of the world relied off tourism and no one's been traveling really. And so, there's all kinds of developing countries and third world countries that have been rocked because people haven't been coming on the planes. And so is this a global phenomena, or is this just something that you think happens in maybe like America and Canada and Europe and some of those New World Order stronghold type of countries?
Global, absolutely global. Put it this way. I mean, the dollar price is the world. Everything in the world is marked against exchange of dollar. For the most part, when you reprice or devalue a dollar, you're affecting everybody. Everybody gets affected. I do think I do think the U.S. is probably the worst to get hit. I really do. And that history shows that the country that promotes the dominant currency is usually, has the biggest loss. Everything changes. So, yeah, it's going to be actually kind of gnarly to see. I mean, I've been talking about this, as you know, for years, and a lot of people didn't understand. When I learned about the SDR decades ago, I mean, I was just blown away. I just kind of put the pieces together. But the entire world is going to be affected. No one gets out unhurt at all.
Does this happen soon? What's so funny is to look at what's happening right now, and you think about the sheer number of people that are unemployed, which, I don't mean that's funny. I mean, it's perplexing that we have so many people unemployed, and we have so many other people that, have depleted all their savings holding on. Then people don't factor in what's happening in other countries, yet the governments are out there telling us that everything's going to be fine. And it's like, that's what's funny. It's like, oh, what is happening right now? Like the amount of money and currency that's been printed, and what people fail to comprehend, I believe, is so much more has to be printed to avoid global poverty on levels never before seen. They're going to have to do insane infrastructure bills and just like give people jobs to stand there. And like, they're going to have to print so much money. And so you look at this and you go, how much longer can this go on? And part of me is like, I don't know, maybe forever. Right. But what's your take?
I agree with you. It's actually wild to see, because I've been kind of preparing for this for a while time, but now it's upon us. I mean, it even has me a little bit on my heels. I don't look at data points so much anymore. I just go on gut feel because it's real. It's here. Where I think this is going is it's the negative composition, because composition works in both ways. I can give you a penny today, double it tomorrow. You got $5 to $10 million at the end of the month. But when you create a currency out of nothing and interest remains, you go negative. So much more, you're right, has to be printed. We got to cover these imbalances before the reprice. But at the same time, I think we could actually hit a point of massive to potential hyperinflation in this country, because you have a thing called velocity of money. How fast it exchange? How many times does a unit exchange hands in a day. For example, if I'm a waiter, you tip me $5, that's one. If I give $5 to a cab driver, that's two. If he puts $5 in his gas same day, that's three. The higher the velocity, the higher the inflation, because it's a signal of distrust. So this will remain until people become distrusting. And you're seeing that. You're seeing that in gross numbers if you just have a conversation with someone on the street. It is out there. And when people start changing their spending habits, and I think we had a conversation about this over dinner, is when people start changing their spending habits. Example, a family, an individual or a family of four, they go to the store on Saturday or Sunday to buy their groceries, right? And let's say $100 is what they spend. They start to notice that week after week, 100 goes to 103, 105, 108, 110. It starts to go up. And then pretty soon they're like, okay, I'm going to beat it. I'm going to go on a Tuesday, right? Because they're going to try to save that. They catch on. Well, when people start spending change their spending habits and they circulate currency or velocity goes up, that's essentially, creating a hot potato effect. Like, I don't want it. I don't want it. And it becomes self-fulfilling, because the only thing that gives the dollar any credence is the full faith of government. And we're losing that full faith. Governments know this. They know we're at the end game. The Treasury of the United States says it cannot afford its interest by 2024. That should mean something. I mean, that's what? That's 3 years away? I mean, so we're here. And I start to see that. And here's the thing is, as things start open up, the pent-up savings, if there is any, that's going to start to hit the street on a reduced manufacturing base of goods and services. Inflation's there. You're going to get devaluation or deflation in anything derived of credit, which is mostly stocks, corporate buybacks, all that kind of stuff. Squeeze the hell out of it, make $1 million. Yay, it comes back. Real estate, it comes back. Interest rates are starting to rise. That's not because we're growing. That's because we need to entice someone to buy our crap, right? So this is here. It's happening very quickly. And the benefit with what I do and where we're at is First National Bullion. We have real good boots on the ground experience of what that feeling is. And I have these conversations about velocity and hot potato effect, changing spending habits with people coming through the door. And I've already heard it from them. Yeah, I do this, I do that. So it's already starting to happen. Eventually that scales. And with 4 stores and two-way markets, you get a great opportunity to really feel what average people are thinking of. And we deal with anybody from someone that's coming in to buy $500,000 to $1 million worth of bullion to someone that just wants to come in and buy 10 ounces of silver because that's all I can do. So you got this wide spectrum. So I'm in a unique position to where I can actually see what I talk about unfold. And it's kind of blowing my mind, because you remember I've been talking about this for so long, and it's almost like things are playing out fairly closely to what I said was actually going to happen. And it's not that I'm the smartest guy in the world. I just read a lot, and I used a lot of common sense.
So then what do you think the future looks like?
Interesting question, because there's two sides to that. One, you're going to have a lot of pain. A lot of people are going to get hurt in this, and that sucks. That's upsetting to me, because I see people that come in and sell me metal, and they're not wealthy individuals. I mean, they're selling 5-ounce, 10-ounce bars of silver just to put food on the table. And honestly, Jake, that's heartbreaking. But you're going to have, I think the middle class is gone. I think you're going to have.
And do you think the middle class is gone because if inflation picks up and you have a fixed income, then you lose your standard of living that you had? Because there's kind of two camps. There's people that are like, everything's going to collapse. And like, I kind of used to think that. I don't. I think that what's my personal opinion of what's more than likely long-term, doesn't mean there aren't crashes, of course, and deflationary periods throughout history as always, but I think it's going to be an invisible crash. because first of all these rich people have all their money, they don't have it in cash. They have it in real estate and they have it in stocks. And so the best way to do this is an invisible crash where the prices of everything go up, right? Venezuela had the best performing stock market in the world last year. And so we should all move to Venezuela.
Yeah,
and
right.
So I agree that I think the middle class is going to continually erode, but I personally believe it's going to happen at their fixed income of what I think the average American household is like 50 grand or something a year. So if you make 50 grand pretty much every year, maybe it's 52 the next year, 50, 49 the year after. But in that range, if there's a 20% inflation over a couple years, that 50,000 with just a 20% inflation, 5% a year for 4 years, which seems like a modest call, all of a sudden you're wiped out and you don't even see it coming because, we haven't had a deflationary collapse in the streets. What is your take on that idea of an invisible collapse? And what do you think that looks like?
I think you're right. I mean, that could be possible where things are kind of happening behind the scenes and you got the fixed income that's going to be there. But keep in mind that anything priced in dollar has to find a lower price of value because the dollar has to get revalued to discharge a bankruptcy, so to speak.
Oh, so then you don't have mass all these companies all over the world going bankrupt, so you devalue the dollar so everyone can pay it off easier?
Kind of. It's kind of like what other countries. You got Mexico, you got Argentina, you got Venezuela. They all go through a reprice where they just revalue the credit that made the currency to devalue the currency itself. So it takes less currency to pay off the debt, but your cost of living goes up. That happens all over the world. But when you have a dominant yield like the dollar, you really get one shot of it. It's at the end of your cycle. And I think that's why you have all these stimulus and the mass rush to produce as much dollars as you can, because you know that they're not going to be as worth as much. And where I believe the middle class is going to be wiped out, you could have the slow invisible thing, but at the same time, you will have a market downturn. You will have a downturn in real estate. You will have a downturn in equities. And we talked about this once, and you brought up Venezuela about what does that look like? What is that, that stock market? And you brought this up again last time we met and had dinner. So I don't think that's going to happen. And my comment was to you is those countries don't dominate the world of exchange. We do. When you reprice the dominant unit, you affect everything. So you're going to have, in my opinion, these market downturns that are going to be very, very painful. And they will happen very quickly, much like they did in 08, much like they did in the .com. You wake up one day, down 10%, Friday, you're down 50. It's just boom. People are so shell-shocked, they don't really know how to react. So now you're left with near nothing or not enough value to be able to buy at the lows and rise it back up. Because after this happens, it's just going to go back up. It's business as usual. It's just not the dollar pricing it. So you're going to get this reinflation. But if you don't have something concrete to work with, if you don't have, let's say, metal that is going to rise in value as currencies devalue, because it will meet the abundance of currency in the system. That happens. If you don't have something to work with, you're not going to be able to pick up stocks at a 50, 60% downturn. You're not going to be able to pick up real estate at 30, 50, 60% downturn because you can't put two quarters together to make a nickel. Right? So the ones that see this coming and are prepared, they're going to own everything. The ones that aren't, unfortunately, well, they're going to be forced to take universal basic income at probably a cost. Nothing's for free. There is no free lunch, and eventually the music always stops and there's not enough chairs. So that's kind of my take. It may be a little bit of a hybrid of what you're thinking with the slow, visible thing, but at the same time, if you don't have something of value to buy, a fourplex that goes from $1.5 million to 500,000, if you can't put something together to get it, what does it mean to you? You missed it. But if you do, then next thing you know, that $500,000 fourplex now goes to $2 million. Right? So It's going to be interesting. It's going to be very painful, but at the same time, I think this is probably the greatest opportunity in anybody's lifetime to take advantage of what you can absolutely see is coming. There is no question about it. There's no way out of it, right? You can't print your way to prosperity, and eventually the music stops. That's coming.
So for everyone listening, we're going to wrap up here in a moment. If you'd love to see Mark back on, obviously Mark and I could talk for 8 hours, and Mark has a lot of interesting things to say. So if you want to see Mark back on, give us some of your questions, comments down below. Let us know, and we'll have Mark back on. But let me ask you as a final question, what's your 2021 opinions on the gold and silver price?
Silver easily hits its nominal high of 50. It'll break it, in my opinion. Gold's going to break and hold 2,000, but silver's where you need to be. As I mentioned, at some point, you can't afford the cost it's going to take to get it out of someone's tight hands, right? So silver's above $50. $50 or higher, in my opinion. Gold's going to break 2,000. It's going to hold. And if things absolutely go off the rails, right, and people wake up and they start that velocity hot potato of money, I mean, this stuff could go very, very high. We are at a very, very fragile point. So it's a tough call. It really is. But I'm going to say we're hitting that $50 mark.
All right. So for everyone listening, please give us your gold and silver price predictions for 2021 right there down below. For everyone listening, if you want to get in touch with Mark, right there down below is First National Bullion. Like I said, Mark's been my dealer for almost every ounce of physical products that I own. Become a good friend. And so I encourage you to reach out to Mark right there down below in the description. If you want to see Mark back on, once again, give us some of your questions, comments right there down below. And be sure to hit the like button on the right side, the left side, right over there. Send this out to more people. And thanks for coming on, Mark.
I appreciate it, man. Thanks for having me. Always good to see you.